Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading. Thank you for tuning into our podcast, The Secret War on Cash. And if you haven't subscribed to this podcast, we encourage you to do so, as we'd love to stay in contact with you and bring you more exciting podcasts like we have for you here today. I have Chris Agelastos with me. Chris, we're here to talk about fun and exciting things in the economy today. And I'm being a little bit facetious because we're starting off with
Yeah.
not even something that's even remotely close to fun, just if nothing else, given the title alone. So
Yeah.
let's get right into it here. Make sure. All right, what do we have? We have this is out of the Economic Collapse blog, which, if you're looking for non-depressing news, there's probably, I mean, in fairness to them, the website, the web address, is telling in and of itself. So
Yeah.
if you're not looking for bad news, going to a blog called The Economic Collapse is probably a place to stay away from. Nonetheless, here we are. So the economic collapse, the everything meltdown in quotes, global supply chains are collapsing and most people cannot even imagine the pain that is coming. Okay. Why are you laughing, Chris? This
It
is
just
not good
sounds it just
news.
sounds so pleasant, you know? We're just
It's
delivering the good news here.
I mean, look, and that's just it. It is the news. So, in that, we'll get into it. I mean, it has a very aggressive title, but I will say, and we talked about this prior to the show, like this is a very meaty or beefy article. I mean, there is a lot of stuff in here. It's
Yeah.
a longer read than many of the things that we typically cover, but I would tell, for those who tuned in, click on the link, and definitely it's something that I would give a read to if you want to kind of get a feel for what's going on right now, because we find ourselves in the middle of the war in Iran, excuse me. And
Mhm.
there well, let's get right into to what's happening here. We've heard a lot about what's going on with the canal, the strait.
Mhm.
And when we look at, we've heard, if you've watched any financial news, you've heard how they talk about how disruptive this is going to be to oil and fuel supplies, et cetera, et cetera, et cetera. And we're already starting to see that. But what's interesting, and one of the first things they point out in this article, is that even though, yes, and it makes perfect sense to us all, like, okay, they have this war, the oil production is stopped and all these things, the tankers that are arriving to our shores right now carrying oil are the tankers that were sent prior to the war even starting. That's how long it takes them to get there.
Yeah.
So any pinch that and squeeze that we're already starting to feel, theoretically or technically, I should say, there hasn't really been a per se disruption yet. Yet.
Yeah.
In terms of like what's happening. Yes, it's happened over there, and like most things in the marketplace and the economy, a lot of it is anticipatory. But one of the things that they mentioned is that because of what's happening with, again, these tankers from before the war still arriving, if we are to avoid this very catastrophic scenario like they talk about in their title, they say that this war needs to end like quickly, like pretty
Yep.
much like right now.
Yeah, and even well, they point out too, even with a quick resolution, it's not going to fix the problems quickly, meaning it's going to take and they say in here multi years to fully recover. And part of that is because of the pipeline lag that they talk about. And if you and I go to the grocery stores, or we go to the gas station, right, there's still enough supply. Prices may be higher, but there's still enough supply because we had stores. We had extra product for these types of situations, right, to help when there's a problem somewhere in the supply chain. And so the real test is going to come when all of the new supply that's coming in, which is now, diminished, can't replace what's being consumed. And that's when we're going to start, going backwards and using more than what's coming in. And that's when you really see prices move. And they point out in here, it's not just about gas prices, because that's the first thing I think about anyway when there's issues with oil. production, and we see prices spike because we're going to the gas station maybe every week or every couple of weeks, and so we notice that effect pretty immediately. But this disruption causes problems in all levels of merchandise, food, because of fertilizer and transportation expenses, packaging and plastics, manufacturing, just about anything that is made. An energy disruption causes problems and spikes in pricing there. So it's a cascading effect that takes time to really move through the cycle, and we're just seeing the beginnings of it. So all the grumbling that you hear, at the office or with your friends talking about prices, and especially at the pump, this is just the beginning of the problem. And even if we solve things quickly, I know President Trump is hopeful that we're days or just weeks and not months away from a solution here. But that may be a lot of optimism too. We really don't know yet how this is going to pan out, and it could take years to really fully recover.
Well, so you mentioned gas prices. This is a
Yeah.
little sidebar to this article, but on that note, I was actually talking to a friend of mine yesterday. He got a new car and it's kind of issues, whatever. And it was in the shop, so he had a loaner car,
Hmm.
and he's a realtor. He drives around a lot, and so he didn't want to fill this car up with gas and bring it back because you're not supposed to. Gas is expensive. Why put all the added money in there? But long story short, he kind of was shooting me a few texts yesterday because and I think it's a SUV he had as a loaner vehicle, but apparently all over social media right now. I don't know if you've heard about this, but he was telling
Hmm.
me that there's all these people talking about how they're doing something to our fuel because of probably having it relate the manufacturing or the production of our fuel
Uh,
that is causing it to burn more quickly, like maybe like
oh,
basically
great.
like almost like thinning it out, if you will.
Uh,
And I hadn't heard anything about it, but apparently this is all over social media. And then he said that to me, and I noticed in my own car. I think there might be something to this because, it's kind of like it fits in line with like when they started selling the same bag of chips with only half as many chips in the bag at the same
right.
price.
Yeah.
I think
Shrinkflation. Right.
I think they might be doing, and I'm not laughing, but we're laughing at these things that aren't funny, but
Yeah.
I think there might be some validity to this. So anyway, now going back to this article,
Yeah.
another very interesting thing, and I watched President Trump, comment on the war on CNBC the other day, a couple days ago. Um, Bottom line is that yesterday actually it was, excuse me, and he was very very pointed in talking about how, you know, this war with Iran could be over like tomorrow because they could just go in there and annihilate them. But what
Hmm.
what they talk about in this article, Iran knows they are no force against the United States of America. But what they talk about is how Iran is or has been retaliating. And what they would do, excuse me, is that they just will start attacking the power grids of neighboring countries and just create more and more and more disruption. And so
Yeah.
what really spoke to me as I read that, Chris, is like, man, you've got, it's just that person who has nothing to lose. So what are they going to do?
Right.
They're going to take down anything and everything they can, in that process. And that's kind of a frightening thing. In the disruption, that would create would be very, very extensive, very
Yeah.
extensive. And already, going back to this fuel cost thing, again, in this article, it talks about how starting mid-April, I think it was April 17th, 10 days from right now, that Amazon is going to start charging a 3.5% increase in a fuel surcharge. 3.5%. That's pretty
Uh,
sizable. And there's just the cost of things in general, how much they're going up. They From just a few years back, I think it was since 1988, how like beef costs have gone up like fivefold, and that's only going to go up even more so. So, I mean, the implications and the ramifications of this financially of what's happening, and to your point you said earlier, and you talked about this too, is this is something that's not going to be fixed right away, and could be could take forever. I mean, President Trump said that again, if they go full bore on Iran, it's something they may never recover from. So
Yeah.
that's why, this is why the secret war on cash, it all kind of meshes in there. And for those of you tuned in, if you have not called us to take advantage of getting a free copy of the secret war on cash, I would encourage you to do so, as well as information about what you can do to kind of help hedge yourself financially to make sure that these inflationary repercussions are not something that are going to take the toll on you like it has on so many people. You can contact us by phone and or text at 1-800-289-2646, or visit us online at swissamerica.com. I'd love to get that information out to you. No obligation, but something I think that could prove to be invaluable for you and your family. So let's look at this second article here, Chris. Is also something that has one of those. To me, I found this to be um, really encouraging because it explains, especially again for those people who are looking at or involved in the gold or silver market. It talks about how there are major financial storms ahead, and I think we all know that. I mean, we're living it. And what they highlight and what we've seen a lot of is investors are just not really sure about gold and silver because this war hit, and gold and silver, which is on a tear, and it quite frankly it was on a tear more so than it should have been. I mean, it just was going crazy in 2026, and now they're sitting here looking at, okay, well, what's happening here? And they talk about how short term, as investors are trying to figure things out, um, is it may just sit and hover a little bit, may not as well.
Yeah.
But one thing they're very clear about is that the long term forecast for gold and silver, which is very bullish and very aggressive, that's been reaffirmed through this whole process because of what's going on throughout the world right now in terms of marketplace and the economy.
Yeah, absolutely. And short term, there can be a little bit of volatility. Albeit, what's great about being in the metals market right now is we saw so much growth in 25 and the beginning of 26 that even this volatility that we're seeing now is all in the profit territory. Meaning, it's not dipping into your principal. Maybe people that bought 3 or 4 months ago might not have as much profit as they did have, but they're still in profits, which is overall a good thing. And really, they point out that this is um, uh, the energy problem, which we kind of talked about in the previous article. It's sort of this magical lever hidden behind everything, and so this oil disruption feeds into inflation, interest rates, government debt pressures, all of these things that ultimately cause currency debasement and push up precious metal prices. So this sort of volatility is actually a good thing for the metals markets, as long as and for the individual, as long as you're in it, and that's where we come in to help people figure out what they should be doing to manage their risk and protect themselves from all of this. But rising yields like this could break parts of the financial system, and that's really the storm that they're kind of talking about here. Is yes, we're seeing energy prices move up right now, but the long-term effects of that can cause major problems in the system. And at the end of the day, higher rates, stress on the debt, stress on the financial system, war, obviously, inflation, all of those things make people want to shift towards hard assets for security. And that's where gold, silver, real estate, those types of things are really going to shine.
Yeah, you're right. And you know what? The one last little point they made in this article that I definitely want to touch on is that, it's not. It's very easy to look at. Okay, this war is going on and blame Trump for it, maybe, or blame Iran for it, maybe, or all these different things. But what I really would encourage people to not do is get caught up in this moment. And if you look at the last part, what I mean by that, the last part of this article, in the last 26 years, so since 2000 until today,
Hmm.
The US dollar has lost over 93% of its purchasing power. Over 93%.
Yeah.
I mean, that's unbelievable. And even, that people say the counter argument for people who, in my opinion, kind of are choosing not to deal with the reality, like wage increases keep up with that and so forth. It's not true. You can't, I mean, our currency has lost so much. And
Yeah.
it's not only that it's lost so much, Chris, but when you're talking about an over 93% loss in value in 26 years, when I look at that, the problem is there ain't a whole lot left to give back because
Right.
now you're down to less than 7%.
Yeah.
And now you look at these situations and a lot of other situations that were taking place even prior to, President Trump's recent term here. So this is a a reason why having tangible assets is just so vital. And again, as I encouraged people a moment ago, if you haven't already done so or you need to learn more, please contact us. All right, Chris. Well, thank you. We got through two biggies, two tough ones, two not so pretty ones, but
Uplifting.
again, very, I think, very informative. And as I mentioned earlier, these are the first article in particular, and the second one as well. They're very good reads and very informative to just kind of give some perspective on, what's taking place. All right.
Absolutely.
Well, until we meet again or talk again, we wish you a great rest of your day, great rest of your week. And again, if you're not subscribed to this podcast, please do so. We'd love to talk to you more in the future. Have a great rest of your day.
Yep. Take care.